if your insurance premium is risk-based, then that brings focus to the level of risk of your property and where it's located, to encourage investments in risk reduction and risk prevention so that we can build resilience and reduce that risk.
Welcome to Sustainability Leaders. I'm Michael Torrance, Chief Sustainability Officer at BMO. On this show, we will talk with leading sustainability practitioners from the corporate, investor, academic, and NGO communities to explore how this rapidly evolving field of sustainability is impacting global investment, business practices, and our world.
The views expressed here are those of the participants and not those of Bank of Montreal, its affiliates, or subsidiaries.
I'm Angela Adduci with the BMO Climate Institute, and today we'll be talking about resilience and natural disasters. Around the world, natural disasters are becoming more frequent, more severe, and more costly, and this shift is especially pronounced in the insurance industry, which is grappling with increasing exposure and vulnerability of buildings and the built environment in areas that are prone to hazards. In some parts of the United States and Canada, we know that insurance is becoming increasingly unaffordable, or in some cases unavailable for homeowners. In the face of this challenge, the physical resilience of buildings and homes to natural disasters is increasingly important. Today's guest works with the Geneva Association. It's a strategic international think tank comprised of 90 insurance and reinsurance CEOs representing $22 trillion of assets under management. Globally, this organization works on highly strategic topics that the insurance industry could impact or that could, on the other hand, impact the insurance industry. Her most recent research, which we'll focus on, seeks to understand driving factors behind rising risks from extreme weather and emerging challenges around insurance availability and affordability for home and building owners. Her research asks, what is needed to safeguard home insurance amid rising exposure and vulnerability to extreme weather? This is just extremely timely and extremely important work. So I'm really excited to welcome Maryam Golnaraghi, the Director of Climate Change and the Environment at the Geneva Association, to discuss her recent publication on the critical need for investment in local resilience. Maryam, thanks so much for joining me today.
Thank you very much for the invitation. It's really a pleasure to be here.
So I'm curious to hear from you how the Geneva Association made the decision to undertake a years-long study on resilience and its influence on the global economy.
As you mentioned, Geneva Association is an international think tank of the insurance industry. And what we try to do is to bring significant amount of thought leadership through industry collaboration and cross-sectoral partnerships to try to find solutions for critical issues that are facing the society where insurance industry can play a critical role. So the industry has been investing significantly in research and development to understand the underpinning drivers of rising extreme weather. Now, let me share with you some numbers. Over the last 3 decades, insured losses have accounted for around 30% of total economic losses from rising extreme weather. And when you look at insured losses over the last 3 decades, they have risen from around 20 billion on average per year to over 100 billion. In fact, when you look at 2020 onwards, you see that insured losses have been above 100 billion, and the industry is anticipating that insured losses will hit about 200 billion USD in 2025. The need to provide risk-based insurance premiums. What does that mean is if your insurance premium is risk-based, then that brings focus to the level of risk of your property and where it's located, to encourage investments in risk reduction and risk prevention so that we can build resilience and reduce that risk. As an industry, the organization decided that we need to shine light to the foundations of these rising exposure and vulnerability, which are all based on societal priorities and decisions we are making, and maybe offer a practical roadmap for how we can actually reduce risks and prevent new ones at the property and local levels so that we can make sure that insurance stays viable, available, and affordable in the market for all.
Thanks for sharing that, Maryam, especially those numbers. The projection of $200 billion in insured losses in 2025 is massive. I can see why the industry would be interested in exploring why that dynamic is happening and how resilience can be better baked into our economy and our society. So, you mentioned the socioeconomic factors that are exacerbating vulnerability to extreme weather. So it's not just climate change. There's other factors at play. Could you dive in a little bit to what those factors are?
Yes, absolutely. Our research reveals that there are a number of factors. Let me give you some examples. First one is land zoning practices driven by socioeconomic priorities, where we're going to build, our homes, our commercial and industrial assets. So what essentially we see is that based on current land zoning practices, this has led to increased concentration of people and assets in high-risk zones. Just to give you a flavor, in the United States, roughly about 12.5% of properties are in flood-prone zones, while 60.5% are in wildfire-prone zones. Whereas in Canada, 9.4% of our properties are in high flood risk zones, whereas 46.8% are exposed to wildfires. But the important thing is we continue to build in these high-risk areas. So I think where we build is crucial. The second point is how we build, and that is the kind of building codes that we are using. Generally, for example, in the United States or Canada, building codes are updated every 5 years. But the crucial thing is, are they being adopted and enforced at the local level? And it turns out that there are major issues, particularly related to cost and resource constraints, balancing the need for building affordable homes with safety, political pressures, and others. A third factor is around inadequate operational maintenance of utilities and aging infrastructure. For example, what we've witnessed is that a lot of the wildfires in the United States on the West Coast were caused by faulty power lines of utilities, whereas lack of maintenance of drainage systems in anticipation of a major precipitation could exacerbate flash flooding in the city. Now, urbanization is another factor, how we actually build our urban areas. And what we've also highlighting in the report, that concreting, destruction of natural systems such as wetlands, which are a natural buffer against floods, or inadequate water drainage systems could exacerbate floods in urban context, whereas densification and living in the proximity of vegetation and forest adds to the wildfire risk. But these are just some factors. So all of these issues are leading to higher exposure and vulnerability and subsequently risk. But the important thing is these are decisions made by different stakeholders in the society based on their priorities and based on their mandates. There is opportunity for us to revisit our priorities and reconsider our actions to actually focus on reducing these exposures and vulnerabilities and subsequently the risks of our properties and assets.
That's really interesting. You've laid out a bunch of factors here, very different factors around, building in flood zones, building in wildfire zones, high risk areas, how we build in urban areas, and then the cost. And you made a great point that it's different stakeholders that are responsible for the decisions driving or driven by many of these factors. So do you see an opportunity to maybe improve how these stakeholders are communicating around the topic of resilience?
From homeowners to communities to local to federal governments, utilities, and others, is the challenges that we have experienced in the insurance industry as a result of these rising risks and, unmitigated risk. And what has happened to really bring focus to this conversation is that we've seen two different types of disruptions in the insurance markets with impact on all these stakeholders. First of all, what we've seen is with rising risk and lack of adequate risk reduction and risk prevention measures, we've seen that some insurers have been forced to limit or cease offering coverage in some regions, particularly in the United States and now increasingly in Canada. I can expand on that, mainly in response to regulatory pressures to cap premiums. Obviously, this is happening in some regions in states such as California, Florida, Arkansas, Colorado, Louisiana. So that has been one factor. The other factor is that in other regions that are allowing risk-based insurance premiums, we are seeing that has led to affordability concerns. Cost of insurance is becoming a critical subject of conversation. For example, when homeowners have to pay a significant portion of their household gross income to cover their annual insurance costs. So coming back to your question, yes, the communication around this topic finally started to materialize when these kind of challenges started to be felt by insurance and insurance industry, and we saw these disruptions and subsequently the impacts on homeowners, communities, governments, and so on. So the question is, well, how are we going to solve this? Having communication and discussion and raising awareness of the society is great, but we are confronting a major issue and with potential that this issue, in the absence of investing in local resilience, is going to get bigger and bigger. So insurance industry has done investments to find the underpinning causes of this risk, to share that with governments, with their policyholders, and also through a number of what we call resilience think tanks in United States and Canada, the Institute for Business and Home Safety in the United States and Intact Center for Climate Adaptation have developed a lot of solutions for how to solve these problems. But reality is that solving these problems would require commitment and incentive by all these stakeholders whose decisions and actions are impacting exposure and vulnerability. And this has been the focus of our report. Can we identify critical actions and incentives for various stakeholders to take to actually solve this local resilience and property resilience issue?
That's such a fascinating dynamic that you note here, and really important work. And you alluded to this, but according to Aon's 2025 Climate and Catastrophe Insight Report, 2024 was the costliest year on record for the insurance and reinsurance sector in Canada. So we saw 4 major natural hazard events within just a month of each other over July and August. And this resulted in nearly $6 billion in insured losses. And these were different types of perils. This was flooding in southern Ontario, a fire in British Columbia, flooding in Quebec, Hurricane Debby, and a hailstorm. And so very different perils all happening in very close proximity to one another, all very close together in time over the course of a month. And alongside this, as you mentioned, we see a costly rebuilding process and a lengthy rebuilding process. So curious to hear, based on the research that you've done, what do you think that it will take to bring down the cost of these events, as well as the time that it takes for our communities to recover?
That's an excellent question. In fact, in the report, what we did is we looked around the world to see who's actually has achieved that, who has precisely achieved impacts at the local and property level to bring the cost of these disasters and to build resilience in responding to the future one. Now, as I mentioned, different stakeholders, starting from the homeowners, can take critical actions. But what we need to do is we need to understand their behavior. What is behind their decision making? What can incentivize them to actually invest in retrofitting the homes? So when it came to homeowners, what we discovered is for homeowners to decide to live in an area, to buy a property in an area, that's generally driven by decisions linked to quality of life and cost of living considerations. And what we've seen is there have been the development of what we call mandatory hazard disclosure laws. So when you go to buy a home, that seller needs to disclose what has happened to their home, what kind of retrofit measures they have taken. Once these laws have come into force, and with rising insurance costs, which means cost of ownership of that home has risen, particularly in hazard-prone regions, homeowners are starting to become more aware of this and more reluctant to actually invest in those properties. Now, if you are a homeowner and you own a home that might be in high-risk areas, sort of the factors that can help you decide to invest in retrofits in your homes linked to, well, do I understand what my risks are? Do I have an expert opinion of what I need to do in what priority to address those risks? Do I have any subsidies or funding available to help me with the cost of retrofits? And ultimately, what's my incentive? Would that lead into higher valuation for my home? Could that lead to lower insurance premiums and lower mortgage rates? So the point that I'm trying to make is, if we really want to tackle these issues at its core, we need to start stakeholder by stakeholder, understand what's the drivers of decision making and how that can be incentivized towards better decisions that could lead in resilience. First of all, is we need to have a shared understanding of the hazards and where there is rising potential disruptions in availability and affordability of insurance. And in fact, they are great examples, including one in Canada. The insurance industry worked with the government at the federal and provincial level to identify 10% of homes that are at high flood risk. And that helps to bring attention and focus into where we need to put our investments in retrofits and so on. The second thing is to develop specific solutions to prevent risk of new constructions. We have to stop building in high exposure, in areas that are highly exposed to extreme weather. The third one is around retrofitting existing properties and implementing projects that could impact that exposure and vulnerability across communities. One of the most important examples, which I think we need to really consider, is an example from United States, a program called Strengthen Alabama Homes Certification Program, a program that has been established through the state government working with, counties in Alabama that are at high risk. The program has strong legislation behind it, has funding behind it. The funding comes out of collaboration of insurance industry with the government and has expertise and support behind it. And in fact, it has been demonstrated that homes in Alabama that were fortified based on insurance industry standards to withstand power of hurricanes have gained 7% in their valuation and are benefiting from lower premiums. Another element is redesigning our post-disaster aid programs. Now, a lot of homeowners don't buy insurance because they believe that government handouts will save them after a disaster. And in fact, that has been a discouraging element for anybody to invest in their own resilience, thinking that handouts will come if something happens to them. Last but not least is development and deployment of innovative solutions. I think our rate of adoption of new technologies is slow. What we did as part of the project, we looked at numerous innovations along a whole range of different areas, from risk analytics to new materials and constructions, to technologies that can, monitor and suppress fire before it becomes a disaster. I think, this is a call out, for example, to government, to those that are funding innovation to increase resources, and subsequently we need to expedite our adoption of these technologies.
Thank you for walking us through all of that. So my final question to you would be, how do you see the insurance industry moving forward in response to this challenge?
One of the things that we are doing in the insurance industry is identifying critical sectors. Obviously, we've talked about the critical role of government, homeowners, and so on. But we are also looking at more disruptively around this. Are there critical sectors that we could be working with and collaborating with where structural changes could lead to, incentivizing behavioral changes? One of them, for example, in the real estate valuation and mortgage systems. We took a deep dive in this report to look at the current valuation and mortgage systems, particularly as they link to insurance, to see if there could be ways where, through that whole decision of where I'm going to buy and how am I going to mortgage my property, homeowners could be impacted and learn more about the risk of their property through the financial implications of ownership of that home. So one area is, partnerships with valuation and mortgage systems to try to bring issues related to challenges for insurance, particularly as relates to the term of the mortgage before mortgage approval, to attention to the banking and lending sector. Insurance industry is already doing a lot, is significantly investing in R&D to not only understand the underpinning causes of, this risk, but developing solutions. I mentioned about IBHS at Institute for Business and Home Safety in the United States and Intact Center for Climate Adaptation in Canada. There are significant amount of guidance and standards that being developed through insurance-funded research that's now being adopted in certification programs for properties to actually incentivize investing in retrofits, certifying the homes, and so on. So obviously, a lot more of that is going to be needed. Thirdly is going to be around maybe raising awareness. One of the things that insurance industry is doing is translating a lot of these guidelines into certified training programs and working with universities and technical institute to train, not only insurance brokers, but also mortgage appraisers, home evaluators, and home inspectors. And clearly, last but not least, is around product innovation and service innovation. And, the industry is developing digital apps targeted at homeowners to help them assess the risk of their property, connect with experts to see what they can do about it, and then incentives around premiums to actually invest in that. But at the end of the day, I want to express that while insurance industry is at the receiving end of risks that are generated through our societal decisions, it cannot solve these problems alone. And we really need to work collaboratively through cross-sectoral partnerships, working with the public sector and others to find solutions that will have the high impact at the property and local level. And that is really the top priority of the industry.
I couldn't agree more. Thank you so much for walking us through that and for joining us today.
Thank you very much. It was a pleasure to be with you today.
Thanks for listening to Sustainability Leaders. This podcast is presented by BMO. You can find our show on Apple Podcasts, Spotify, or your favorite podcast player. Press the follow button if you want to get notified when new episodes are published. We value your input, so please leave a rating, review, and any feedback that you might have, or visit us at bmo.com/sustainability leaders. Our show and resources are produced with support from BMO's marketing team and Puddle Creative. Until next time, thanks for listening and have a great week.
For BMO disclosures, please visit bmocm.com/podcast/disclaimer.